So in this video, let's see how to apply the Fibonacci levels and predict the price movement, whether it be a Bank Nifty or Sensex or any other crypto market or anything. Okay, the Fibonacci levels are always the same and it is same everywhere. So let's learn it from basics to advanced level. I'll explain you very much clearly so that you can apply this in any market you want or you wish to trade. Okay. So first of all, let's open all you need to do is just open the TradingView website, and currently I'm in the Bank Nifty index page. Okay, I'm in the 1 day time frame. I usually like to avoid disturbances. I don't like to look at the 5 minutes time frame unless I'm taking a BTST trade, or I want to look at the particular market moment. I would like to rather look at the smoother moment. Smooth moment, if I can go to the smooth moment if I change the time interval to 1 day. This 1 day time interval avoids us from most of the disturbances of market, traps and everything, and gives us a clear picture of the direction. So I personally prefer applying Fibonacci on a 1 day time frame. So let me just show you how to apply a Fibonacci tool. Here is the Fibonacci tool. You can just find it in this place here itself. This is Fibonacci retracement. There are Fibonacci extension tools. I've selected this as favorite, Fibonacci retracement and Fibonacci extension from the sidebar here. Okay, and those will be added here. Okay, let me just look at this and let me apply clearly. Okay, so this is the chart, and here you are already seeing the volume, but not let's not get into the volume now. Let's just stick to the Fibonacci extension tool. This is the Fibonacci retracement tool. Okay, so now what I'm going to do is I'll tell you how to apply this Fibonacci tool. So just select the swing low. Swing low is the one which is the lowest of the swing here. If you look from the 2025, there is no other low than this particular candle here, right? And if you go up, there is no other high than this candle here, right? So all you need to do is just plot the Fibonacci extension right from here and here. And also take a look at the levels I've marked here. Let me just zoom out a little bit. Look at these levels, guys. 0.382, 0.5, 0.618, 1.618. These are the only levels that you need to look at. These are the only levels that you'll ever need. Okay. I'm saying this out of experience because 0.382 is a level that market will definitely touch. Okay. And zero point 0.5, 0.618, this is the golden range from where the market will reverse or bounce back each time. This happens 8 out of 10 times. I won't say 10 out of 10 times because it is a game of probability at the end of the day. So it happens 8 out of 10 times. And finally, the 1.618, this one is the maximum the market can move in a particular direction. Okay. So based on this here, I can say that market can fall maximum till this 42,573 level, but it can definitely touch 52,872 level, and also it can definitely retrace back from this level, 51,889, or between these levels, not at this level. Yeah, sometimes it may just touch this and bounce back, but there is a high probability that it may come inside this zone. This is the golden zone. Okay, come inside this zone and then reverse. Let's also look at the Fibonacci extension tool. Let's suppose for now that market comes to this zone and then bounces back. Okay, so let me just delete this first. Okay, let me just delete this. Now I'm applying the Fibonacci extension tool. Same from the swing low to the swing high, and then the R level, where I'm thinking currently that it will reverse. So this is the gap zone where we previously had the zero point 0.5 to 0.618, the golden level. So that's where I'm plotting the extension tool here. And also you can see this uh, 100 EMI here. So this is a pretty good support. So I'm just pointing it there. So let's look at the levels. So if at all it reaches this zone, look at this, guys, how accurate this is. This can be the future of the Bank Nifty. You can only get this. I mean, you can only get this view if you switch to the 1 day. But if you're looking at your charts in 5 minute time frames, or 10 minutes or 15 minutes, you may not have a uh, depth like this. You can have a look like, okay, in the next candle it might go up or it might go down. But like this is the big picture, right? This is the big picture. By this, I can simply say that first it will fall and then it will go up, and I can also say which levels it will touch and from where there are high probabilities that it will bounce back or reverse, right? So yeah, after I plot it here, you can see 0.382 here. As I mentioned previously, 0.382 is a level which market will definitely touch. This is the market, this zone, which market loves literally. Okay, this zone, market will never go untouched. It will definitely touch this zone. And when I say touch, there are 90% there is a 90% probability that it will touch, and there is 80% to 60 to 80% probability that it will definitely cross this 0.382 and get into this zone of zero point 0.5 to 0.618. Okay. And also there is approximately like a 50% probability that it will reach 1.618 level. So that's how this is. You can neglect the one here, but yeah, it can definitely reach 0.61, and the probability for that is 60% or 50 to 60%. Okay, so that's about it. And yeah, let's also look more closely. Let's apply this in the previous, in the past uh, cycles. And this will help us analyze how accurate our Fibonacci tool is, right? So let me just start by applying this tool, Fibonacci extension tool from this. Let us just take this here. Let me just make this view a little bit more clear for you guys. Okay. Okay. Let me just do this first. Okay. Let us consider this zone. Okay. From December 2024 to Feb. Okay. So let me just draw a extension from here to here. Okay. Look at this here, guys. With the 100 EMA combination and the 0.58 to 0.68, look at this. It beautifully happened here, right? After coming here, it touched 0.38. Okay. It came back, and then again it bounced. It stayed in the 0.58 to 0.618. Actually, I can plot this more accurately, because there is another high here. I can't say this is the swing high, because definitely this is the swing high. Now look at this, guys. How how beautifully this worked out here. This is what I was talking about. See, it beautifully touched 0.382 level, okay? And then it came and it danced in the golden zone of zero point 0.5 to 0.618 level, okay? And then it almost reached 1.618, and then it is falling down. But yeah, just look at this. This 0.382 level, it will definitely touch. I told you it will definitely touch. And zero point 0.5 to 0.6, this is the level from where it reverses. It reversed and then it bounced back. So that's how it can be done. And also let's also look at this level. Let me also plot here the extension tool. Look at this, guys. It crossed. Yeah, I told you it will definitely touch 0.382, right? It dropped completely. It bounced back exactly from the golden level, and it reached somewhere top here. And so this is how accurate the Fibonacci is. So you just need to plot it between the swing high and the swing low. This is about the Fibonacci extension tool. Let me also give you a brief explanation about the Fibonacci extension tool. Okay, let's, yeah, as I explained previously, okay, let me just delete this. Yeah, okay, let's have a clear look here. So this is the extension tool, right? So as I mentioned previously, this I'm telling this again because this is the current market situation and you can take a little advantage of this, right? So yeah, that's why. Uh, okay, this is the swing high, and just this other point is where you think the market will reverse or the market has started reversing itself from. As of now, it started reversing from this point here. If the market forms a green candle above this here, somewhere like there, somewhere at this point, and it continues, then there is a high probability that it will reach till 57,147 for sure. For sure. Okay, and then there is a high probability that it may reach this zone of zero point 0.5 to 0.618 and then reverts back from that zone. That's how this Fibonacci works, and Fibonacci works every time. There is no, this is because our universe works on the Fibonacci. So that's how these levels work. Okay, let's also apply the Fibonacci extension tool on uh, on any recent example. Okay, let me just delete this. Accidentally clicked. Okay, let's see. Okay, let me apply it here itself. Okay, or let me just drag it a little bit more. Okay, yeah, I can touch this, and this. Cool. Yeah, let me just pick it from here. Okay, I'm marking the high here and then the low. This will be the low, right? Cool. Look at this, guys. How beautifully it has respected all the levels. Look at this. I just plotted this randomly and it is respecting that too. Look at this prawn 382 level. See, it touched, came back, and then it bounced in this zero point 0.5 to 0.618 level, again came back, and then it reversed and then touched 1.618, and this became a support. And if you see, if I just extend it a little bit back, somewhere like this, it was a previous resistance level, and current market is still respecting this level. So that's how the Fibonacci works. I hope you enjoyed this video. This is all about the Fibonacci you need to learn. Okay, there is no need to go to any courses. I give you all the info you need to this info you can apply in any market, not only the bank Nifty. You can apply it in Nifty 50 or Sensex or any crypto market or anywhere. Okay, you don't need to pay anything else anyway. This video is enough. This is the masterclass for the Fibonacci, guys. That's all. Okay, there is nothing, no holy grail or anything. This is enough. And take a screenshot of these levels, guys. 0.382, 0.5, 0.618, and 1.618. These are the four levels. These are the only four levels that you'll ever need. Okay. I hope you enjoyed this video and let me know if you have any doubts. And don't forget to subscribe to my channel. This will help me, motivate and create more such content for you guys. Well, that's all for this video, guys. Thank you. Thank you for watching.